Hey, what's going on, guys? This is Daniel, one half of the Kwok Brothers. And in this video, we're going to talk about, are we screwed, right? And I'm going to break down for you guys what I believe is happening in the economy and perhaps even what's going to happen in the months to come, and ultimately how we're going to respond to take advantage, right? Because there's definitely opportunistic aspects of this whole situation. But before we go ahead and get into it, guys, don't forget to like and subscribe. And of course, as I mentioned in the last update video, this is not a sponsorship, but I want to do a bit of a shameless plug for Citadel. Now, if you guys haven't heard in the last video, Citadel is an organization run by my very good friend, Mackenzie, and also Andy. And their mission and vision is to literally unify professionals, business owners, successful entrepreneurs all across the world to solve the world's greatest problems. So if you want to get more information on what they're looking to do, anything up to $10,000 in donations, guys, and the donation link is also in the description as well. The Kwok Brothers here, myself, Sam, our team, we're going to be matching up to $10,000 in donations. And we're going to be matching up to 10 grand. So whatever you donate, we're going to match up to $10,000. And they're only looking to raise 60, guys, to get this year started. So click on that link in the description below to learn more about Citadel, what they're trying to do, and also to donate as well. Okay, so let's go ahead and get to it. Let me dissect a little bit what's happening right now. Now, for the record, we are technically, by definition, already in a recession. Now, guys, a definition of recession is very simple, right? I know it's a word that freaks a lot of people out, especially when it's on CNBC and all these news outlets, but a recession is nothing more than 2 consecutive quarters in which the GDP has a negative trend. And well, guess what? The first 2 quarters of 2020 have shown that. The second quarter of 2020 has shown a 32.9 decrease, and the first quarter of this year, 2020, showed a negative 5% decrease in the GDP. So we're already in a recession. But guys, do I think it's going to get better? Do I think it's going to get worse? I ultimately think it's going to get worse. Now, I know what you might be saying. Daniel, why are you being so pessimistic in all these videos? Are you just trying to get us to click? Well, no, not necessarily. I'm not pessimistic. I'm not optimistic, guys. I'm realistic. Because in my observation, guys, and also in my experience, if you're too optimistic, you end up just running with the herd and you end up having the same fate as the herd, which you get slaughtered. Now, if you're too pessimistic, you end up having a lot of opportunity costs and you end up losing out on a lot of potential opportunities to make money, invest, and grow your financial wealth. So I like to stay kind of right there in the middle. Now, guys, James Montier, some of you may know, some of you may not. He's written many books, but he's primarily a behavioral analyst and actually has been a member of GMO Asset Allocation. Has been in the finance game for a very long time and somebody that I follow and pay close attention to. Well, check this out. This is what he says. I've never seen a market so highly valued in the face of uncertainty. Now, guys, maybe the reason for the high value in the face of the uncertainty, well, maybe you might be saying, well, Daniel, it's because the Fed balance sheet, right? It's the Federal Reserve. They're continuing to print money. And yes, you might be correct, right? Which, by the way, as of this week, the federal balance sheet stands at $6.95 trillion. But I would still heavily agree with James Montier. Matter of fact, if we look at the banks, right? If we look at the banks, we can see extreme amounts of over-leveraging, similar or sometimes even greater than the levels of what we saw in 2007, 13 years ago. Matter of fact, the Bank of England released a study saying that if we compare 2007 in terms of the leveraging, we are exactly the same in terms of the levels that these banks are over leveraging capital and assets. I forgot to tell you, that study that the Bank of England did was in 2018. Now, guys, of course, you could probably guess that the last 2 years probably weren't any better, especially what happened with, everything that's going on medically and all the stuff that's happening in the United States and all around the world, as a matter of fact, right? If we look at Japan and what's happening there's a lot of craziness and volatility that's happening. So I think it's safe to say the last 2 years has not gotten any better. Let's talk about today, right? Because that report came out in 2018 and they were on the same levels. Today, the big banks, especially the ones here in the United States, own a little over 55% of the $3.2 trillion global leveraged market and also the CLO market. Now, guys, if you don't know what a CLO is, it's a collateralized loan obligation. It's pretty much the same thing as the CDO, which was the collateralized debt obligations. And for those of you guys that have seen the movie The Big Short, which is one of my favorite movies of all time, you guys would know exactly how the CDO is one of the most responsible things for the collapse of the US housing market and, of course, the collapse of the United States economy as a whole, we're seeing a lot of the same things. It's like we're seeing 2007 happen all over. Whoa! A wild Tai Lopez has appeared. You know what I love more than housing market update videos? This new bookshelf that I just installed. And you know why you should subscribe to the Kwok Brothers? Knowledge. So don't forget to like and subscribe to the video for more knowledge. Just to give you guys more general data on what's happening with the economy, we have 1.8 million jobs that got added in July, but of course the current unemployment rate still sits at 10.2%. The airline industry, this is very fascinating. The airline industry expected to lose 75,000 jobs. Let's look at the other end of the spectrum. The cost of lumber is doubled compared to the same time last year. It stands at $754 today. 16,000 restaurants permanently closed due to the pandemic, right? Another one, U.S. Department of Agriculture launches a $3 billion initiative to buy food from farmers and deliver it to food banks. Now, guys, what does that tell us? What does that tell me? What does that tell you, right? It tells me, number one, this is kind of their form of a bailout. Number two, it tells me that a lot of the supply chains are distorted. I mean, even going back to lumber, because of all this stuff that's happening with the pandemic and all the restrictions on travel, on the restrictions on buying, selling, trading, exchanging, right? It's definitely distorted and dwindled the U.S. ability to buy, sell, import, export, and it's caused a little bit of a curveball into the economy, right? So with all these facts that I just mentioned, with everything that's going on, overall, we're seeing damage everywhere. And even worse, we're seeing extreme levels of over-leveraging in the world's biggest banks. Of course, at front and center, we're seeing the CMBS market, which is the commercial mortgage-backed security, right? It's front and center of the conversation. Now, guys, historically, we will tell you that typically the demise of an economy is a result of a bubble popping. And in this case scenario, it's the massive over-leveraging of banks, specifically around commercial mortgage-backed securities and other investment vehicles, which leads us, guys, specifically to real estate and some of the housing market news that's going on right now. Now, we're still seeing a total seller's market. Now, if you guys haven't caught it, last week I explained what a total seller's market is. An even market is when there's one buyer, one house, everything's great. Kumbaya, right? A seller's market is when there's 1.2 buyers for every one house. A total seller's market is when there's 3 buyers for every one house. And that's what we're seeing right now. Matter of fact, looking at the stats here. So looking at this past week, right? This past week here in August, compared to last year, same week. So we're looking at year over year, there's a 12% increase in the median price of an average single family home. Now, guys, this might scratch your head a little bit because foreclosures at the same time have hit a 15-year low due to a lack of inventory. Matter of fact, they were down 80% in the month of July compared to last year. So if you're comparing the month of July 2020, compared to July 2019, we're seeing an 80% drop, right, compared to last year in foreclosures. But, right, info released this week, actually a couple days ago, from the Mortgage Bankers Association says that mortgage delinquency rates have spiked in the second quarter of 2020 at seasonally adjusted rates to 8.22% of all residential mortgages. Guys, that's anything between one single family house, a 1-unit single family house, to a 4-unit building. So anything that is classified as a residential mortgage, the delinquency rate has gone up to 8.22%. Check this out. The FHA delinquency rate has skyrocketed 596 basis points to 15.65%, which, by the way, guys, the stats that I just both mentioned, right? The numbers that I just mentioned for both FHA and all residential mortgages, 8.22%, 15.65%. Both of these numbers are at the highest since they started taking the survey, which was back in 1979, which may mean possibly the highest that our country has ever seen in terms of delinquency rate for mortgages. And to wrap it all up, we have 4.2 million mortgages still in forbearance. So follow with me here, guys. On one hand, we have the lowest foreclosure rate in 15 years. On the other hand, we have the highest mortgage delinquency rate in both FHA and also all residential mortgages, the highest delinquency rate that this country has ever seen since they started tracking it in 1979, quite possibly also in the 244 years of this country being in existence, with the overall arching theme of extreme levels of over leveraging, similar to what we saw back 12 years ago with the same plan with no intention of slowing down. Which, by the way, guys, if you want to watch a horror film with your date this Friday night, don't watch The Conjuring or The Exorcism or any of these really scary movies. Go to usdebtclock.org, right? Our good friend Dave Seymour introduced all of us to it. Go on that site right now and see what's happening. It is scary, scary stuff. So to summarize, we have foreclosures on one hand, we have, highest delinquency rate on the other hand, and we have extreme levels of over leveraging by the world's biggest banks, creating a bubble that we have yet to feel the sting of, and yet everybody is out there still buying deals. They're buying houses. Everyone's singing Kumbaya. They're walking around in circles. They're praising God, whatever. It's a fugazi, it's a wazi, it's a woozy, right? How do we not see this yet, right? I mean, I think somebody has to be blind, right? Do we not see what's happening here, right? Like, you honestly have to be, I feel like, a 4'9" old blind Chinese man with, instead of a cane or a guide dog, at the end of the leash, he has a chicken, right? I mean, guys, am I the only person that's going crazy here that's not seeing what's happening, right? Let me break this down for you, right? Let me break this down in case you are the 4'9" old Chinese man, which, by the way, no offense to the 4'9" old Chinese men community here in the United States, but here's what I think. Once the stimulus and the moratoriums wear off for the mortgages, we're going to feel the sting of those delinquencies. Would you guys agree, right? That 15-year low that we see in foreclosures is not going to last very long. It's going to wear off, right? We're going to feel the sting. Once that hits, we're going to see an increase in inventory in terms of the supply for the real estate market. And on the other end of the spectrum, we're going to see this house of cards that represents the over-leveraged position of the banks tumble. And unfortunately, guys, we're going to see the same consequences that we saw in 2008, where we saw millions, billions, and trillions of dollars in 401k, life savings, assets, stocks, real estate values are going to plummet. And what that's going to do is that's going to decrease and completely destroy the buying power of the consumer, of the American people. And we're going to see a complete 180-degree shift in terms of the supply and demand aspect of the real estate investing housing market. We're going to go from a complete total seller's market to a complete and total buyer's market. And the people who are diligently on the sidelines, getting ready, raising capital, having liquidity enough and ammo to attack when the time is right, are going to feast. Now, guys, I'm making these videos first and foremost to tell you that I don't know it all, right? I have yet to see what's going to happen, right? I don't have a crystal ball. I'm not Doctor Strange where I could use the time stone and have my head turn in a million different ways. And I could tell you there's going to be, 6,500,000 different ways that this can happen. Guys, a lot like you, I don't know what the future is going to hold, right? But what I can do is at least offer some of my opinions, some of my research that I've done, and I can offer you some things I've learned by having conversations with mentors and also my personal experience in terms of what I've accomplished in real estate. Now, guys, am I prepared for this? Yes, right? I've actually stopped buying real estate completely in the last 3 years because I saw this coming back in 2017 when I knew that the 10-year treasuries were eventually going to wear off after the administration back in 2010 signed record levels of quantitative easing back in 2010. I saw it coming. I knew something was going to occur. So I stopped buying real estate after 2017. But what do we do? What do we do with all this information? What do we do with all the stuff that we just talked about, right? We just went through the gauntlet in terms of what I believe is happening in the economy, right? Here's what we do. We go towards tangible assets that stand the test of time, such as real estate, which leads me to ask the ultimate question. Is this a good time to buy right now? And of course, the answer is still no, but it very well possibly may be in 5 to 6 months, depending on how a lot of things go, which of course the big one is the election and how that goes. But we have to do it correctly and we have to do it the right way, which leads me to tell you about next Thursday. Guys, our channel, if you haven't noticed, have reached 100,000 subscribers. I thank you guys so much from the bottom of my heart. Big shout out to Sam and my team for this great accomplishment. To do that, to celebrate 100,000 subscribers, we will be hosting an hour live training Thursday, 7 p.m. Central Time here on our YouTube channel. We'll be going YouTube live, and I'm gonna bring a couple of my friends, my friend Kevin Tuttle, who's actually my primary real estate partner who owns the other half of my capital fund, and also Dave Seymour, right? You guys all know Dave Seymour. He was joining us a couple videos ago, the guy with the British accent. I love the guy so much, the founder of the term the economy being propped up by Mickey Mouse money, right? I'm gonna have those two guys, very close dear and friends of mine, to join me in talking about, hey, what do we do here, right? Both these guys have been there, done that. They've seen decades. They've been in the game for a very long time. Both of them will be joining me, and we'll be talking about, we'll be addressing the question, what can we do, all of us, right now to make sure we take advantage of the opportunistic times that are going to be happening in the later months. And that's why I want you guys to subscribe. That way you guys will know and be notified next Thursday, 7 p.m. Central Time. We'll be doing a 100,000 subscriber celebration by giving back to you guys. So we'll have an hour-long training, right? I'm gonna have Dave, Kevin, we'll do a recorded video. It should be about 15-20 minutes on what we can do today to make money and be opportunistic, keep ourselves safe from what's about to happen. And I'll also add in my own thoughts as well, along with a lot of cool things, which also we're gonna be doing a free giveaway. We're gonna be giving out 3 $100 Amazon gift cards along with the book and also some mugs and some merchandise. So guys, join us next Thursday night, 7 p.m. Central Time. We're doing training. So again, guys, subscribe and I'll see you guys next Thursday at 7 p.m.